Hi Forex traders, welcome back. This is Charis Trading Institute, and today I'm going to take you through a top-down analysis on the dollar and foreign currencies going into the week. This is 19th of February 2022, so I'm going to take you through a top-down analysis on the dollar versus foreign currencies so that you know what to anticipate going into the week and position yourself on the right side of the market. So quickly, like I always do, I always emphasize that we begin our top-down analysis from the higher time frames, and reason is because the higher time frames are the main drivers of liquidity. The higher time frames are where the institutions position themselves, so they drive the lower time frames. Okay, the higher time frames are the main drivers of liquidity. So to define institutional order flow, we will need to consult the higher time frame and see if there is a draw on liquidity on the higher time frame before we go about refining these areas into the lower time frames, and as well before we start executing our positions on the lower time frame. So we begin with the monthly time frame just to have an idea on where the draw on liquidity is going to lie on the higher time frame. So this is the monthly time frame of the dollar index, and previously what we had was we saw the dollar retracing into a discount of this previous monthly range. So what we have here is we have two swing points. One, we have a swing low and we have a swing high above here. Then we see price retraced into about 50% of this entire range. If you use your Fibonacci and measure between this swing low to that swing high, let me set my Fibonacci to default settings so that you're going to see where the 50% of that so my Fibonacci is set to default, and this is the 0 to 100 level. If you put your Fibonacci level between two swing points, 50% of the Fibonacci level is your equilibrium. Above 50% is premium and below 50% is discount. So if we are anticipating a bullish bias, we would like to buy from a discount or equilibrium, and if we want to sell, or if we are in a bearish market, we would like to sell in a premium. So this is how to approach the market on the higher time frame. So this is our equilibrium region. This line is the equilibrium of this swing point, so we can take out our Fibonacci, meaning that anything below this line, below this, is actually discount. So you can see that the dollar actually was trading into a discount. We had about 4 to 5 months of bearishness, but this bearishness was only repricing into a discount level. So what institutional reference point can you see in the discount level? We can see that price traded into a fair value gap, or you can call it a buy side imbalance, sell side inefficiency. Price traded into that buy side imbalance, sell side inefficiency on the monthly time frame, and we see that the dollar is rejecting to the upside. So is there a reason for the dollar to go up? Yes, there is a reason for the dollar to go up. Number one is that there is a pool of liquidity void to the upside that needs to be refilled. All of this one-sided delivery is liquidity void, so we would like to see the dollar reprice into the sell side imbalance and a buy side inefficiency. Even if the dollar is going to continue bearish, we would like to see the dollar retrace into that level of inefficiency, to rebalance previous sell side imbalance and a buy side inefficiency. Also, if you pay attention, you will notice that there is a volume imbalance here. There's another volume imbalance to the left side that was violated. This is also a bearish order block that has a fair value gap attached to it, and this is a point of interest because we like to pay attention also to other blocks that have fair value gaps attached to it. And above that swing high is a pool of buy side liquidity. Above This relative equal highs is also a pool of buy side liquidity, okay, and there is a little sell side imbalance and a buy side inefficiency above here. So I strongly see the dollar going up, okay. At least to the nearest term, the dollar should trade into this level of inefficiency to rebalance the inefficiency there. So let's go to the weekly time frame quickly. On the weekly time frame, already you can see that the dollar took out sell side liquidity residing below this old low and traded into that buy side imbalance and sell side inefficiency of the monthly time frame, and it's a fair value gap on the weekly time frame, okay. And price has currently created a swing high. Price has created a swing high, and so we see an expansion to the onside. Currently we are in a bullish order flow on the weekly time frame. Why? Because we see the willingness of the weekly candles to consistently take out previous weekly highs. All of these weekly highs were traded through by the next candle. This weekly high was traded through by this candle, so we are in a bullish order flow on the weekly time frame, okay. What happened last week? Price traded into a fair value gap here, or you can call it the buy side imbalance, sell side inefficiency. That was where we see the dollar traded into before it started to go up to the upside, okay. Where am I seeing the dollar is likely going to go on this weekly time frame? At least the dollar should trade above this old high, which is a buy side liquidity residing above that high. There's a buy side liquidity residing above this old high. Then we can see a level of inefficiency here, okay, or we can call it the sell side imbalance and the buy side inefficiency. I can refine this weekly I can refine this to this weekly fair value gap as my point of interest, okay. So I'm looking to see the dollar trade into this sell side imbalance, buy side inefficiency on the weekly time frame, because there is a pool of buy side liquidity residing above this all high fair value gap, okay. So the institutions would like to reprice into this premium level before they continue to sell to the downside, or the institutions may like to trade into this buy side liquidity residing above this all high and the pool of liquidity residing above it on the monthly time frame. So this is what I'm seeing on the weekly time frame, okay. So on the daily time frame, let's go and see what the daily time frame is saying. On the daily time frame, we saw that price actually gave us a shift in market structure after trading into that monthly point of interest, which is the discount. We saw a shift in market structure to the upside, telling us that we are now bullish, okay. So we are now what? We are now bullish. So I'm going to refine this on the daily time frame so that we have clarity. So this was a shift in market structure because price changed character. So this was a shift in market structure and price traded into a breaker block, okay, a breaker block, because price formed lower low before it broke structure to the upside. What we have here is a breaker block, the wick of this candle or the high of this bullish candle to the left side, okay. This bullish candle, the last bullish candle here that was violated here, okay. So the institutions will likely come and pair their longs on the high of this candle. So that was what happened, okay. That was what happened here, or the high of the breaker block here. So where has price traded into? Price traded into 50% of this daily bearish order block, which is the order block mean threshold, was where price traded into last week, and we now started to see a rejection to the downside. So where is it likely going to go to before we continue to the upside? I would like to see price trade into this tiny fair value gap of the daily time frame. Reason is because there is a bullish order block. I'm also paying attention to this volume imbalance, okay. On the daily time frame, there's a volume imbalance in here. So if I see confirmatory signatures that we are going to continue to the upside, then I know that the dollar is going to go to the upside. But I would like to see the dollar form the low of the week at these levels, either this volume imbalance or this bullish order block that has a fair value gap attached to it. I will most prefer to see price trade into this discount, the discount of this range, this current daily range between this low to this high. I'd like to see price trade into that discount, and that would be the bullish order block and the fair value gap here, before we start to go to the upside again to attack buy side liquidity residing above this old high, here. Okay, if you pay attention, you would see that there is also a tiny fair value gap here, okay, or order block that has a fair value gap here. This is also a drawn liquidity on the daily time frame. So I would like to see price retrace into these levels and trade into the buy side liquidity residing above the previous 20-day high, which is this, the sell side imbalance buy side inefficiency, which is this, and also the weekly sell side imbalance buy side inefficiency. So I'm bullish on the dollar. Okay, so you may want to go down to the 1 hour time frame and look for confirmatory signatures on how the dollar is going to start going to the upside. Especially, I would like to wait and see expansion or displacement to the opposite direction. Okay, we are currently bearish on the 1 hour time frame, so I would like to see a declared displacement to the upside. Then I would like to execute when price return into internal range liquidity. Remember, there are two types of liquidity residing as external range, liquidity in form of buy side liquidity, okay, residing above old high or relative equal highs, okay, or equal highs. That kind of liquidity is called buy side liquidity. The liquidity residing below old lows, relative equal lows, or equal lows is called sell side liquidity, and these two form of liquidity are called the external range liquidity. Then the internal range liquidity is liquidity residing in form of fair value gaps, order blocks, or liquidity voids. Okay, liquidity residing within the range in form of fair value gap, order blocks, those are internal range liquidity. So I would like to see a clear displacement to the opposite direction, and when price returns into the internal range, either fair value gap, order blocks, then I would like to start going long on the dollar while I short foreign currencies. Okay, so since we have a bullish week for the dollar, we're anticipating bullishness on the dollar this week. We should anticipate bearishness on all foreign currencies, Euro USD, GbpUsd, NZD USD, whatever pair you choose to trade. I choose to trade GbpUsd in the last 2 years, and this has helped me tremendously to grow and become a better trader. Okay, so I'm going to analyze the pound dollar, okay, so that we see my anticipations on the pound as well. So these were my trades last week on the pound. I had quite a great week because I called about 5 trades and all of them went to my direction. So I'm expecting a bearish week on the GbpUsd, right? So let me go to the daily time frame or the weekly time frame. Sorry, my chart markup on GbpUsd is a little bit messy because that's my favorite pair. So previously price traded into a sell side imbalance and a buy side inefficiency on the weekly time frame. Okay, you can see that here. This is also an institutional order flow entry drill. There is the criteria for institutional order flow entry drill, but this is institutional order flow entry drill, like most of you would know. Price traded into it, and we had a retracement. Price went to retest that level, and now we have what is called smart money reversal, because it creates also a weekly bearish order block with a fair value gap. So this is high probability setup, and this is supposed to be our low risk sell. Price traded into this fair value gap, and this is also called internal range liquidity. Remember, I said when price comes to my point of interest, I would like to see an expansion or displacement to the opposite direction, and I would like to be executing on internal range liquidity, which are either fair value gaps or order blocks, okay, or liquidity voids. So we see price giving us a displacement to the opposite direction, creating a bearish order block on the weekly time frame that has a fair value gap, and this is our internal range liquidity. What is the internal range liquidity here? Bearish order block that has a fair value gap attached to it. So that was why we saw that last week we had last week we had a level of bullishness into that level. Okay, price traded into that internal range liquidity, and this is our low risk sell. Remember, market maker sell model. Okay, we would like to see price trade into at least this strong liquidity, which is the buy side imbalance and sell side inefficiency of the weekly time frame. I would like to see the pound dollar, okay, trade into this drawn liquidity of the weekly time frame, or as well also attack the previous low created on the weekly time frame. So this is the drawn liquidity, this level, buy side imbalance, sell side inefficiency, okay. Or price also we want to attack the sell side liquidity residing below here. This may be long term, okay. So but this is my bias on the GbpUsd. So this is the daily time frame, and on the daily time frame, of course, you can see that we had a shift in market structure. Price traded into the internal range liquidity here, which is that tiny fair value gap. Every time you see a tiny fair value gap, please, you should pay attention to that tiny fair value gap, because that's where the institutions are deliberately hiding their signature in institutional reference point like this. So now we have a new expansion or displacement to the opposite direction that creates a fair value gap, which is going to serve as our internal range liquidity of the daily time frame. I would like to see the pound trade into this level, okay, while the dollar is repricing into that our discount of the daily time frame. I would like to see GbpUsd also reprice into this premium, okay, of this range, this swing high, this swing low. I'd like to see it trade into this internal range liquidity. Then when it creates a displacement to the downside, I will look to execute on internal range liquidity, the fair value gaps, and the other blocks. So where is price going to go? Intermediate term, price is going to attack this old low, okay, because there is a pool of sell side liquidity residing below here. Price is going to attack this old low as well, because there's a pool of sell side liquidity residing below here. And then we're anticipating to see price trade into that weekly sell side imbalance and a buy side inefficiency. Okay, we can go to the 1 hour time frame and look for these signatures. Once price trade into that level on the daily time frame, we like to see a displacement to the opposite direction to create the external range, and we execute on internal range liquidities. So guys, this is how I do my analysis for the dollar and GbpUsd. Please, if you like my analysis, I would like you to subscribe to my channel. I would like you to like this video, and until next time, I wish you good luck, good trading.